Great.
So on Saturday, for example, 70 degrees, right? Maybe even warmer, like a little overcast. It wasn't too hot. Like, where do you want to be? You want to be outside.
Yeah.
So you go to a brewery.
Just keep going.
Just keep rolling. Ryan's telling us about his experiences at the brewery.
Supposedly Mike doesn't like breweries and drinking outside.
I enjoy the brewery by definition, but you lost me at like spending a Saturday sitting at a brewery, just sitting.
Well, you're not sitting. You're outside. You can walk around.
Hold on.
They had goats. They had baby goats.
See, now you're winning me back.
Let's break this
Give
down.
me baby goat.
Let's break this down a little bit. What is the difference between like going to a brewery, hanging out with your friends, having drinks and food?
All of these things are true.
Okay. And a good time, or going to opening day. And
totally agree.
What is the difference?
Totally agree with what you're saying.
Difference.
There's no difference. But here's my thing, right? Doing it once in a while is fun. As I just mentioned, I've been up to Big Farm Truck Brewery. It's fun. I enjoy going there. Pharmacy in wherever that is, like Hampstead area, is fun. I've been to a couple of the wineries up in northern Baltimore County. It is fun. It is an experience. But like after I've experienced it once, this is how I feel about travel. I don't want to go to the same place twice. Like I've been there. So for me, opening day is a one-time-a-year thing. You will not see me at a 3:00 in the afternoon baseball game. You will not see me at a Sunday 1:00 game. I am much more of a like work, live my life, do my thing, and then go out and play. My mom instilled that for me when I was a kid. I used to get yelled at if I didn't go to school. I couldn't go to wrestling. So if I wanted to go to wrestling, I went to school and I didn't tell my mom I was sick. Like that's how I live my life. So the idea of sitting at a brewery for hours is cool. But at the same time, I'm a little bit more like, give me something to do. I got to be moving. It's like, I get a little.
I can agree.
Speaking of which, you guys have your fundraiser coming up.
We do.
So can you tell everybody a little bit about it?
Yes. So we have our third annual Toss for a Cause coming up on July 11th. We pushed the date back a little bit this year. We're going to do the same venue as last year, which you guys
I like
both.
that.
Both got?
No, I couldn't.
No, Christian wasn't there.
Trolley tour, right. The whole work before you play thing that Mike was talking about. But yes, we're raising money for Lung Cancer Research Foundation once again. We're looking to expand the tournament, get more teams there, get more people hanging out. It's not just for people that want to play cornhole. We have raffles. They have drinks.
Is it?
They have
The
food.
11th.
July 11th. That's a Saturday, right?
July 11th. Yes. Okay. I was looking at June.
I got
and
nervous
was like,
for a
wait
second. I got the date
July
wrong.
11th.
But yeah, it's kind of like hanging out at a brewery. You know, you get to drink outside with your friends,
Play cornhole.
but you also get to do something at the same time.
You play cornhole. You can do some raffles and stuff. You know,
and raise money for a great cause.
So what made me think of it? What time does it start?
Noon
12 until like 3? Question mark?
ish,
4?
4-ish
I was
question
gonna say
mark.
probably
I'd
a little
say
later. Yeah.
Yeah.
Depends on how quick you get knocked out in the 3.
Yeah.
What made me
Done
think
at
of it
1
is
o'clock.
like I enjoyed being there. I really enjoyed supporting you guys. I think you have a great mission. It comes from the heart. That all speaks very highly for me. Being a part of it is important. But once I was there, I kind of felt like I'm just like sitting there like with nothing to do. And I realized in that moment that as an affiliate, like the fact that we work together, why are we not literally working that event, donating our time, volunteering for the event? Because your wife was signing people in. And I was like, I can do that, right? So for me, just sitting at that event sounds really cool and fun, but no, I'm just sitting there like, this is really boring. And I enjoyed playing cornhole. That was a lot of fun. I enjoyed winning a whole bunch of raffles, which is really funny. By the way, you still owe us crabs from last year, in case you're wondering.
You're the one that has gift card. You got to use it.
Amanda's got it. But it just, there's something about it that in that moment, I'm thinking like, what could I be doing in this moment instead of just sitting around drinking a beer with my friend. And I don't really enjoy drinking beer. Like, you want to do car bombs, you want to do shots. Like, that's a rally the troops kind of like fun thing for me. But just sitting and having a beer casually with my friends is kind of like, just kind of lost me.
sounds like you'll be signing people in this year.
That's right. That's right.
Found your role.
But at any rate, so we brought you here today to talk a little bit about lending and loans, specifically around the limitation of being able to buy a house when you have an existing student loan or really any existing debt that might make it, precluding for you to buy a house. You want to share kind of your thought period on people's perspective there?
Yeah. I mean, when you think about it, I don't know what, probably 95% of people, maybe even more, have debt nowadays, right? A large majority of people have student loans nowadays, and more people are going to have student loans going forward. So I certainly wouldn't let that be something that discourages you from buying a house. It's called something that we qualify people off of is called their debt to income ratio, right? The word debt is in there for a reason because we assume that most people are going to have debt. Yeah. So,
how many people are you pre-approving that don't have debt?
Very, very minimal. Maybe 1 out of 50.
That might be more than I was expecting.
Yeah.
Like, I'm thinking 1 out of 100.
That's what I was thinking too.
Well,
zero debt?
Zero debt is, when you think about it, people are going to have credit card balances, right?
Yeah.
But that doesn't necessarily mean they have debt.
Well,
they
it's
might
a debt to me.
Well, it's not if you pay it off every single month.
Right.
Oh, well,
right?
yeah, then
so
that's
it's
no
always
debt.
So why I say 1 in 50, most of the reports we pull at least have some amount of credit card debt, but there's a lot of people that just pay those credit cards off every single month.
But
So
then
I
they have
wouldn't
a car
really consider
loan
them
or
being,
student loan.
not the 1 in 50, but yes.
That's true.
But yes, the other people,
Okay.
they typically have something else.
Is there any correlation that you typically see with those people that don't have any debt?
Oh.
In terms of the approval rate?
Or not approval rate,
No,
but
like,
age,
who are the
like,
people?
Who are they? Like what?
Yeah.
Um,
They're conspiracy theorists.
they're typically going to be in your older generation.
Really?
Okay.
Yeah.
Interesting.
Okay.
Yeah.
I could see that. I mean, I wouldn't think it's like an incredibly young person.
No, but I can think of some people that we've worked with that, I don't like carrying debt. I drive an older car. I don't have a car loan. Buying a house is a big deal for me.
Yeah.
And I think we come across those people kind of often.
Yeah.
Yeah, you get those people that don't have debt but also don't have credit, right? So they have
that's
nothing
a different
at
issue.
all, which
Yeah.
yes is a different issue.
Yeah. All right. So what's the biggest misconception about student loans and buying a home? Just like kind of in general.
I guess just that people think they won't be able to get approved with having student loans.
Yeah.
It's funny that people ask that question, like, oh, can I buy a house? Can I get approved for a mortgage if I have student loans?
Yeah.
And it's never a black and white answer, right? It's going to depend on that debt to income ratio that we came back to, which we can dive into a little deeper later on what exactly that means. But having student loans is not going to prevent you from being approved for a mortgage.
Yeah.
And some
I
people
think
think
about, I want to change this person's name. I'm going to call her Leslie. But I think about a client, Leslie, that we were working with that ultimately chose to work with another lender and realtor partner. And I almost feel like they were over promising to her, saying like, oh, no, it'll be fine. And she's in one side of her brain, she's saying, well, I want to buy before, I pay off my student loans. And in the other side of her brain, she's like, oh, I want to pay off my student loans before I buy. And it's almost like, well, if you wait, your likelihood of getting qualified at that time is very high, but you're going to wait. How long is it going to take you to pay off your loans versus the person that's working to pay off the loans and then utilizing maybe a grant program or a down payment assistance program that's going to pay off that student loan debt. I just feel like we get a lot of people that come to us with an irrational perception about student loans. Do you see that?
I wouldn't say just about student loans, but I feel like a lot of things.
Well, yes.
Like,
we get irrational perceptions about a lot.
I was chatting about one with Ryan this morning. We don't need to go down that. But like student loans, yeah. I think when we go to the trolley tour, I see it a lot more where like people come to our table and is like, I have X amount of student loan debt. Can I get pre-approved? And again, it's not just a yes type of answer or no type of answer. You have to dive a little bit deeper to trying to connect them with Ryan. But I would say we do run into that situation a lot. And then we also run into like the case, again, I don't know how this client or person went to another lender, partner, and agent, but like you get someone again who tells them what they want to hear, not what they need to hear, or like kind of shoots them straight.
That's what happened in this case.
I mean, I had it happen this weekend.
Right.
Like it happens all the time in this industry. It's very sad because I think it ultimately gives this buyer not
a false sense.
Yeah, and the experience isn't as enjoyable.
And what you said, and I want to double down on it, right? People are telling buyers what they want to hear, not what they need to hear.
Right.
And sometimes what you want to hear sounds good, but what you need to hear actually sounds better when you hear it. Yeah. Like when you listen and you recognize that, oh, I'm talking to the right person, they're giving you the right information. They're not just like leading you down the road.
And I really value that type of conversation with someone and someone who's even open to listening, but I think that's very difficult to come by. Just in today's world. So,
if you were listening to someone talking about, hey, I have student loans, what's the first thing that you would want them to do when they're coming to you as a mortgage lender?
Check on them.
Yeah. Check on what?
Check on your student loans. What are they doing? There was a lot of people when student loans got pulled out of deferment that got hit with late payments.
Oh, yeah.
And they weren't all correct. Some people should not have got hit with late payments, but their student loans got pulled out of deferment. For some reason, they weren't notified, and they didn't even realize they were supposed to be making payments. They didn't have anything set up. Maybe they had automatic payment set up before, and it didn't transfer over. So we've had a lot of people that we pull a credit report. They would have been a 780 credit score before, and it's down to a 640 because they have these late payments on the student loans they didn't even know about. So
how long would a late payment like that stay on someone's report?
2 years.
Really?
Yeah.
Wow. And something that I've heard before with credit cards, I haven't heard it with student loans, but like calling these people or calling the credit bureaus, being like, I would relate it to a credit card. I have like a Discover account, right? Mm-hmm. Calling them if someone were to miss a payment, be like, hey, I've been with you guys 8 years. Like I've never missed a payment. Like something happened. Like, and maybe they can work it out. Is that true, or is that
the old one-time forgiveness?
Yeah.
Yeah.
Okay.
It's true. I mean, think about it. You are the customer.
Yeah.
So if you have a Chase credit card or Discover, whatever it might be, they want to please you.
Okay.
Their customer satisfaction is their number one goal, right? So if you were somebody that has always made payments on time, has been with them for a long time, and you call and ask them to remove the late payment, refund the late fee, chances are they'll do it.
Yeah.
Now, if you do that 3 months in a row, are they going to do it? No.
Yeah,
right? But if it was just because it slipped your mind 1 month or somehow your auto pay got messed up, chances are if you catch it quickly, they'll remove that late payment.
Okay.
With student loans, a little bit of a different story. Could they do it? Sure. Do they care about customer satisfaction? No, not really, right? You're not applying for, like, you go and open up another Chase card if you want to. You're not really applying for another student loan unless you're back in school. But if it was reported incorrectly, then they have to take it off, right? Or if like you weren't notified correctly, then they have to take it off. So that's something that we've seen people have success with over the last several months.
I feel like as of lately, there has been a lot of mess with student loans, and I don't know if it's just because of what you're talking about, like taking people's out of deferment or not letting them know. It just seems like a lot of people that we've talked to, at least me in the last 12 months about this, has kind of been like, I don't know.
Yeah, that's the number one problem is there was not a lot of clarity when the student loans were taken out of deferment.
Is that something that, who controls that deferment? Was it the federal government or was it, okay.
Yep.
Everybody got hit at the same time.
Yeah.
So, I mean, it's interesting because what you said was check on them. Are you assuming that they're, like the buyer in this case is either A, not aware that it got pulled out of deferment? Are there situations where maybe somebody has like an auto pay and then their amount due was higher now suddenly?
That could happen as well.
So like check on the balance, check on the payment due. Wow, that's really interesting.
The payment plan. There's different payment plans that you can apply for, right? So check to make sure you're in the best one for your financial goals.
Interesting. How do I ask this? If someone had an issue, something like you just aforementioned, if someone had an issue and it impacted their credit score, and then they got that issue rectified, how long would it take the credit score to quote unquote rebound?
It depends. Typically, creditors, so a student loan servicer or a credit card company, any type of creditor is going to report to the bureaus once a month, right? So if you get your student loans corrected today, maybe they don't. What's today? The 20th, right? Maybe they report on the 15th of every single month. So you might have to wait until the 15th of next month until that is.
But is it like a
corrected and goes
direct,
through.
like, let's just say hypothetically, this happened in May of last year or something, March of last year?
Yeah, that sounds right. I can't
So
remember the
let's
exact
just say
date.
hypothetically that it's April of 2026. I've had some negative impact on my credit for the last 13 months. I make a change today. My credit score was 720 before the impact. Now it's significantly lower. Let's just say it's 620. How quickly will it rebound? Would you say that it would rebound to 700 relatively quickly?
If you're able to get those late payments deleted.
Oh,
if you're
wow.
not able to get those late payments deleted, then no. Right? A lot of people think, hey, if I just get caught up on my payments, whether it's a student loan or something else, I'm not showing as late anymore. Right? My account shows that I'm due, right? I paid what I needed to. But those late payments already hit your credit. So the moment that late payment hits your credit score, drops your credit, and just because you get caught back up doesn't mean your credit score is going to come up because you have that negative mark on your credit now.
Now, do all student loans affect or play into your debt to income ratio?
They do, but different loans have different guidelines. Like, for example, with VA, if your student loans are deferred over 12 months, and we don't have to count a payment against you.
Okay.
If you're looking at FHA and your student loans are deferred, we're counting 0.5% of your total student loan balance.
Are there still student loans today, like out there, that are in deferment?
Yes.
Oh, yeah.
Okay.
Oh, yeah.
Okay.
For a multitude of reasons. Yes.
Just thinking.
Yeah, I can see it happening.
It's just I don't know, just very interesting because we talk to so many people, and I'm again not a lender, so I don't really. I'm always like, hey, talk with Ryan.
Right.
But I talk to people that are in their, 40s, and let's say 5-10 years ago, they went to school, and like they were in deferment, but now they're not, and then they're trying to pay them down, and then I don't know. It's just very different when we're the ones hearing it, not knowing what's going on necessarily in the background. So just trying to put some of those pieces together.
Yeah. And I guess going back to your question about what would you do right now, not only checking on them, but also paying on them.
Yeah.
Like start paying on them because people think, oh, I'll just defer it, which like is fine. If you're not in a position to make a payment right now, so be it. And maybe your rates are super low, but at the same time, if you're continuing to defer, those loans are just collecting interest.
Right.
So if you took out $40,000 in student loans and it's deferred for 10 years, that balance is going to be way higher than $40,000.
Well, and that's something like going back to your comment, right? Telling people what they need to hear, not what they want to hear. I think some people think of student loans as though like a deserved quote unquote grant to help me go through school, right? Like I need the money, I deserve it. The government's going to support me and give me that grant to go through school. But then they also see like loan deferment as like I'll just defer it. Like I don't care. Yeah. I'll just defer it. And it's almost like a deserved option, which is not the way that it should be, right? Like we should be taking some
responsibility.
Sure. I don't like that word, but yeah, we should be taking some responsibility to use this as a tool. And student loans are a tool that helps us hopefully qualify for a better paying job that helps us get to the next level. And you're not just taking the student loans. You're not sitting on the deferment for 10 years because, I don't know, even if it's interest deferred for 10 years. But what happens when it's no longer interest deferred? So imagine if you had a $40,000 loan with a 0% interest for 10 years and then you deferred the payments for 10 years. Now all of a sudden you're starting to make payments, but now you're making payments plus interest. Whereas if you could use this as a tool and make a small payment, you could use it to your benefit.
Well, I feel like also in today's world, when I chat with people who want to buy a house and have student loans, it's very rarely that I hear the answer of like 40, 50 grand and under of student loans. Like the amount of people that I've talked to that have 6 figures of student loan debt and haven't paid any of it.
That's because they're not listening to Ryan.
Well, yeah, they don't listen to Ryan, but also like, I don't know. I don't want to knock people because again, if we're using them responsibly and like going to get a better education, hopefully you get that good paying job after the fact. But like, I feel like people put everything on their student loans, like every single meal, every single book, every single like expense.
Well, that's just an education on debt in general.
Well, no, I understand
and credit.
that, but I think that kind of plays into it because again, we going to the trolley tour, we're speaking with a couple hundred buyers within a day.
In a day, yeah.
And then like over that time period, like following up these people, like the amount of people that I've met that have 6 figures of student loan debt and don't have in a 6-figure paying job is insane. Like I think I've met one person and he had probably well over 150, 200,000 of student loan debt.
Yeah.
And works for Northrop Grumman. And I'm like, okay.
Well, that's kind of cool.
That's probably a great job. And
but like, let me ask someone that has $120,000 in student loan debt, but they're doing, it's the wrong word, but like their service to the community. They're working for the public defender. They're working for the hospital system, the school system, where this is a thing, right? Like I'm not making it up. They get student loan forgiveness or student loan.
That's correct.
Repayment.
Typically, there's some sort of clause that if they are working at this hospital for a certain amount of years,
right,
then their student loans will be forgiven. And you typically you have to make a certain number of payments on your own to get to that point where your employer will pay off the student loans. Not always.
Is that still initially accounted against them for their debt?
That was my question.
Say that again.
Like when they're working at this place, are the student loans still counted against them?
Yes.
In terms of debt to income ratio.
Correct. Because the debt is still there and we don't know for sure if it's going to be forgiven or not. There's terms that they have to abide by. They still have to be at that employer down the road.
Now here's a question, like, and I don't know what these workplaces look like, but what if there was some sort of contract that this person had with this company that said, hey, I'm working here for 5 years. In return, my payments are going to be
student loan. Yeah.
Yeah. Like it's going to be forgiven.
There's no way for the mortgage company to get around that rule. I know this, but the thing that is astounding to me, and correct me if I'm wrong, if the student loans are in deferment and they have no payment structure, even if they're at this kind of a company where they're going to pay off their student loans, even if it's 12 years and they're 11 years in, you guys would still have to count a certain percentage of that gross deferred student loan debt against their debt
total
to income
amount
ratio.
Of their student loan debt. Yes, we have to count a certain percentage to
But I feel like if
count the monthly payment.
If someone's on their 11th year, are they paying them off at that point? Is that okay.
In my theory, it was like 12 years that you had to spend working at this facility. They're in their 11th year. But even though they're 11 years and 8 months in, the mortgage company would still have to count that student loan deferment against you. And there are different percentages based on different loan programs and income classes. And those things change too. So like there's no reason to talk about them. But that is something that's wildly unique. And when people say, oh, I can't buy a house, it's like, well, what are we looking at? And what is your specific loan program that you're trying to target look like? Because there are programs that will neglect the student loan debt, like a doctor's loan, for example. Not entirely, but there's certain criteria. But then there are other loan programs where you'll be looked at with a higher debt to income ratio or allowable higher debt to income ratio than an alternative program. And so all of a sudden you may qualify in this new loan program, right? Like there's just no one size fits all, I think is the most important thing.
Correct.
Now, First Home does a lot of Maryland mortgage programs, I guess.
Correct.
Maryland mortgage program.
Yeah, I struggle with that too. I'll say products. I'm like, there's this program within Maryland Mortgage Program, like too many programs. It's a product within Maryland Mortgage Program.
There is one that helps people pay off their student loans. That is Maryland Smart Buy, correct?
That's correct.
And how much of the student loans does that help people pay off when purchasing a home?
Right now it's $20,000. So that has varied a little bit over the years. They call it Maryland Smart Buy 3.0 because this is their third version of the product.
Yeah.
So they have to pay off the full amount of their student loan debt. So if they have 100,000, they can't just pay off 20,000 of it and leave the other 80,000.
Right.
So
it all has to be paid off at once.
yeah, you can pay it down to
Yeah.
20,000.
Yeah.
But you have to be at 20,000 or less for the student loan payoff on closing day.
Now, I feel like when I first got into the industry, 4 or 5 years ago, I feel like that Maryland Smart Buy was like upwards of 50 to 70 grand.
50 was the max.
Really?
Yeah. But it's varied, and it comes from government funds or bank-backed funds or whatever the program is. It changes. It was Smart Buy, then it was Smart Buy 2.0, then it was 2.5. Is that right?
I don't think there was a 0.5.
I think there was.
But I've been wrong before.
I'm going to look it up. But it's changed the criteria, the limitations, the total gross payoff has changed. So some people have really take advantage of this program when the payoff met their student loan debt criteria.
Right.
Okay.
And other people just can't get into alignment.
Yeah. Okay.
Yeah, if you have I don't want to say a small amount of student loan debt, right? Because 20,000 is still a lot.
Yeah.
But compared to these bigger numbers that we've spoken about, but if you are in that, I guess, lower tier of student loan debt, it's an awesome program.
Now, let's take it a layer deeper. Let's say a program like FHLB.
Yep.
I don't know if it's still available or not, whatever. Let's say somebody has student loans of 40 grand. Let's say 30. And you can use Maryland Mortgage Program, whatever, 3.0, to pay off your 20 grand of student loans. Sorry, a portion of the 30 grand, so 20 of it off. And then could you use FHLB to cover that other on the back end? The
Not
other 10?
directly.
Okay.
So you could use FHLB to maybe cover the closing cost and the other items, and then use your own cash to pay down the student loans.
Fair. Okay.
So
Here's another wild one. Okay. And this is going way down a rabbit hole that I don't even think really exists. So previously, this happened one time where I had a buyer have excess money from a seller in terms of a credit coming back to them at the closing table. And what the lender did was like, hey, do you have any credit card debt? And they basically sent a check with that remainder of the credit, what the buyers owed, to that debt collector to pay down their credit card balance or...
was this a VA buyer?
Yeah.
Yep.
Is that the only one you can do it with? Could you, in theory, do that with a VA buyer that had student loans?
Sure.
And just...
But I've gotten caught with this. You can't do it to qualify for the VA Smart Buy.
VA Smart Buy doesn't allow VA. It's only conventional.
Right.
So we're kind of off Smart Buy right now, talking about straight VA.
Right.
Okay, so there would be no Smart Buy here. It would just be a matter of getting a credit, using that credit from the seller to put
Correct.
towards. Okay.
Yeah, Smart Buy is only conventional.
And the premise is that you can't use the seller's funds to qualify for any grant program. Is that right?
Correct.
How would you... I guess in that case,
Well, qualified debt to income wise.
Correct.
Correct.
So like if you needed to pay off that credit card in order to qualify for that
credit to
you could not use the seller credit to pay off the credit card to qualify for the mortgage loan.
You'd have to
you
use
have
your
to
own
be able to
funds.
qualify for the mortgage loan independently, and then at closing you could pay off the credit card, sure, but you have to be able to qualify for the mortgage purchase prior to settlement.
We're actually doing your example right now.
What do you mean? Who, me and you?
Yes. You might not know it, but we're getting seller help and we're getting Maryland Mortgage Program. Because Maryland Mortgage Program has products that offer closing costs or down payment
Is that with our
assistance
VA
as
buyer
well.
coming from California?
Yep.
Yeah, okay.
Interesting.
No, not from California. The other VA buyer. I don't want to say any names, but yeah.
Okay.
Well, as you guys know, there's a lot here. There's a lot of topics to talk about when it comes to debt and student loan debt in general. But the key is that answer the question, yes, you can buy a house with student loan debt in the state of Maryland with a VA, FHA, or USDA loan, even a conventional mortgage loan. It doesn't mean that your specific qualifications are going to meet the needs, but we're going to be able to run your situation. Ryan's here to take you up on a Smart Buy program if you qualify. Christian's always available to reach out, but you can reach our blog and so much more information on our website under frankoliverco.com. Go to additional resources. You can read a little bit more about the blog. And you can reach out to me on Instagram at michaelfrank_____. Christian, how can people reach out to you?
You can just find me on Instagram at Christian.
Just find me on Instagram.
Just find me.
Ryan, how can people reach out to you to get more information about Smart Buy and all of the other loan programs that you offer?
Instagram's great as well. Rip Kurrle. My last name's Kurrle.
Rip Kurrle.
But it's Kurrle.
Kurrle.
Yeah, there you go.
Yep.
Anyway, well, thank you so much for being on the show, and we appreciate your time.
You got it. Thanks, guys.
What's up, guys? Thanks for watching. For more information on the housing market, Real Estate 101, how you can leverage your position in today's market, and so much more, click on the link below. If you like this video or have a burning real estate question you'd like us to answer, leave us a comment and let us know. Don't forget to like and subscribe so you never miss an episode, and we'll see you again real soon.